What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Supermicro computer stock, ticker symbol SMCI, on a variety of time frames in anticipation of the next trading day, Tuesday, February 20th. SMCI stock here on Friday finished the day down about 200 points a share, 19.99%. This stock has been so in play. It has been absolutely absurd. We started the day, over 1050, testing nearly 1,100 bucks a share on Friday, and tanking off to about the 800 buck range. Up a little bit after hours. We closed at about 803.32. We're up just under 12 points in the after hours. Listen, as always, in the after hours, take the movement with an absolute grain of salt, whether it's in your favor or against your bias. The reason being is that volume is so incredibly low. I mean, if you've ever traded after hours, you know what I'm talking about. You can actually move some smaller stocks with not even that much size. So understand that and just take it with a grain of salt. But of course, if I'm looking at this from a bullish perspective, I'll take 12 points up after hours over being flat or especially down. But let's take a look here at SMCI stock, again, on a number of different time frames. Try to get as contextual as possible as we head into Tuesday. Remember, Monday, the market is closed in observance of President's Day. So don't show up all ready to trade at 4 in the morning on Monday. Nothing's going to be moving. So we'll be back on Tuesday. It's going to be a long weekend of chart analysis here on the Roensch Capital Charts channel. Hope to see you subscribe if you get value out of these videos. Let's dive in here. So I want to start with SMCI on the 1 minute chart. You guys know I'm a scalper at heart. So just briefly, we have to talk about intraday opportunity on SMCI to, really, the stock has been so in play to look at potentially generating some revenue via scalping. And I know a lot of you are looking at this stock with a core position. I always like to try to, if a stock is in play, generate revenue via scalping around a core position. But I know some of you are looking at this simply as a trade as well. A lot of you are going to be just trading this intraday. But let's take a look at this, because I have a feeling that this one might be in play again on Tuesday. So let's just take a look. First of all, listen, let's zoom in here, and I know that there's going to be bias around this name, and that's cool. Listen, I love to see stocks winning, but here's the truth. Especially in stocks that you have a core position in, if the stock is going down anyway, and you're long, isn't it effective to try to generate revenue to the downs? Right? If the stock's going to be down 20%, it's a volatile name, right? But if the stock's going to be down 20% in a day and you own a core long position and you're looking for the thing to go higher, wouldn't it be smart to try to scalp some additional revenue to the downside to kind of effectively, if you want to think about it this way, lower your cost basis? Sure, it doesn't feel good, but I think it's more effective to do so, right? And when you have a stock that's as in play as SMCI was on Friday, again, I have a feeling that this may be the case on Tuesday as well. In play just means extremely elevated relative volume, fresh news catalyst, big range, right? It can be to the upside or the downside. It does not matter. But when stocks are like that, they have much, much better edge. You guys understand that intraday, 99% of the market, there's almost no edge there. It's random, right? We can't trade random chop. If you take the best traders on the planet and you tell them, you can only trade Apple every day from here on out, and you have to only trade Apple and you have to trade it every day, I'll be the first to tell you, if you remove my ability to select tickers, I, as well as basically any other of like great trader that you could possibly find on the planet, we'll just lose money. Stock selection is everything. And there's so much edge in a stock like SMCI on Friday. Okay, and I'm looking again at this one on Tuesday. The reason I have this particular portion of the chart pulled up here is just because I want to show you an example of something. Okay, now here's what I'm looking at. So look here. This is what I call a textbook breathe and go setup. I recently taught a class on this on the main channel. It's a setup I teach members in the Roensch Capital Gold server. If you want to take a look at that, it's the first link in the pinned comment. This is a setup I developed over time that I forward tested for a long time, and it is a key setup in my playbook for these type of market conditions that we've been seeing, and it has rather high expected value over a big sample size. And this, it works to the upside and the downside. This just happened to be the downside. You see here, this 9 EMA, total self-fulfilling prophecy, right? That's all it is. That's the only reason I want it on my chart. That's my entire belief around TA. And you see here, beautiful setup. You see this downside move on higher volume, okay? And then you see a pull back into that level, and you see here volume kind of tanks off. And then what you do, okay, you see an entry here. You can basically risk as little or as much as you want. For me, I like to risk, in most cases, up 2 pennies, but SMCI is so volatile that it has to be a bit more than that. You have to be relative to the context of the stock. As little as possible above that 20 EMA, okay, the purple line. That's where I would set my stop here in this particular instance, and there were at least tens of these throughout the day on SMCI, by the way. I'm sure many scalpers were very active on this name on Friday, and likely will be again on Tuesday, whether it's moving big upside or continuing to the downside. And then what you get here is you get this big downside move. Enter here, right? That's where the entry would be for a lot of scalpers looking at this. At least that's where mine would be. And you set the stop and you fade hard on a higher volume, okay? And then on exit, I would tear out watching the level 2 box and the time and sales, the tape, watching for a turn, watching for, since this is in the case of the short side, watching for big size on the offers, right? The offers filling in as we move lower, the bids staying relatively light, and seeing big red prints on the tape. And when that starts to curl and turn to the other way, that's when I would start tearing out. This is just, and again, I'm sure we had many scalpers hitting this, 10, 20, 100 times on Friday in all reality. But that being said, let's move on now to the bigger picture, more of a contextual view as we head into Tuesday. Okay, a more macro view. Now, this is the 5-minute. You guys know, if you've been watching the channel here for any number of time or any amount of time, on the 5-minute chart, I'm always looking for big changes in volume that correlate with big changes in stock price. To the bullish side or the bearish side, what does that tell us? It tells us that a big sample size of market participants agrees with one move, right, compared to the opposite direction. So if we take a look here at the volume, you can see we kind of set the standard with that bigger volume open, very common. Now, understand here, we did see quite a bit of elevated volume on this downside move, okay? Bulls, and then we again saw some elevated volume on this downside move. Bulls, you need to understand, it's always very important to understand the psychology of the enemy, so to speak. So understand that bears are going to be looking at this elevated volume on these downside moves, and then the fade in volume once you see like little periods of consolidation or any upside really whatsoever. They're going to look at that and say, I really like that. They're going to say, that's good for my position. We're getting a big sample size agreeing that the stock belonged lower in those moments. Okay, so bulls, just understand that that's what the bear is going to be thinking. I think it's almost more important to understand the psychology of the other side, the enemy, so to speak, than it is to understand your own side's psychology in many cases. Okay, let's now get down to be super contextual with the hugely popular self-fulfilling prophecy levels that I'm paying incredibly close attention to come Tuesday. Okay, what do I have here? You're looking at this chart, you're like, this is the most basic chart I've ever seen. I think you'll find that for many of you, and I'm sure a lot of you are already at this point, the longer you trade, the simpler your charts become. This entire channel, Roensch Capital Charts, is surrounding TA, charts. It's in the name, right? But my strong belief, and I would not want this any other way, by the way, my belief is that TA is nothing more, nothing less than a self-fulfilling prophecy. Psychology. People believe it works, so they make big decisions and program algorithms to make big decisions around those levels. And it tends to work more often than it doesn't in that case. So here on the 30-minute chart in particular, what I'm watching come Tuesday, see this 200 period? We are basically right up against that. From a bullish perspective, I want to see not only that 200 period reclaim, listen, ideally, I want to see us get back above the 50 period, that white line. Okay, reclaim the 200, use it as support, bounce up toward the 50, and reclaim that as well. If I'm a bear, I'm looking at that 50 period, the white line, and saying, if we see a retest, I want to reject hard. And ideally, if you're a bear, you want to see us fade hard off this 200 period downside. Okay, now the 4 hour. Let's move on here. You can see that this 50 period is very much so in play here on SMCI right now. 50 period is currently at 770. From a bullish perspective, if we see a downside test of that 50 period, going to want to see not only a big bounce off of that level, but ideally, I want to see that 50 period moving upside, ideally getting above $800 a share, putting some legs underneath the move, so to speak. Okay, and if you're a bear, it becomes rather obvious. Crack downside hard below that 50 period here on the 4 hour. Now, let's take a look at the most important chart of all, the one that everybody's watching, the one that is most popular with the funds, the institutions, the algorithms, the daily chart. Now, many of you are looking at this, you're like, there's nothing here. The closest moving average of the 50 days down below $500 a share. You're exactly right. Okay, so when we start looking at the daily and things aren't necessarily in play in the immediate time frame, this video is about Tuesday, right? We have to look at the obvious story. Don't overcomplicate TA. That's where people go wrong, I think. Again, I believe this is all self-fulfilling prophecy. It's all psychology, so we need the obvious story. The obvious story, in my opinion, is always the correct story. The correct story to look at, I should say. Better way to state that. So, looking here at the daily chart, what's the obvious story? Well, to me, it's the round numbers. Listen, if I'm a bull, I don't want to give up $800 a share. Ideally, I want to reclaim $900 a share, and really ideally, if I'm a bull, $1,000 a share is the level to watch. I mean, this thing moved 20% to the downside in one day and cracked an all-time high in that same day. Okay, it has to be on the table of discussion. $1,000 a share is on the table. We have to talk about it. But if I'm a bull, I don't want to give up the round number of 800 either. Okay, so if I'm a bull, bounce off 800, head up through 900, ideally make a crack at $1,000. Best case scenario, reclaim 1,000, claim it as support, close above it. If I'm a bear, $1,000 is the enemy right now. Do not get back above $1,000. You want to stay in the 3 figures. Okay, ideally, if you're a bear, crack down below 8, head down towards 7. All right, that's your ideal scenario if you're a bear. Now, really quick, for those of you who are trading options or just interested in the comfort level of the stock, understand implied volatility is a big factor in how your options are priced. It's at 117%, 116%. If you own options right now or you're looking to buy options, understand there is a slightly elevated risk of some IV crush if we were to see this fall back downside toward equilibrium. Okay, just understand that. That being the case, or that being said more so, let's take a look at the bias from Friday. All this is from Friday, positioning as we head into Tuesday with the options traders. Huge sample size, lots of volume, comparatively speaking, contextually speaking on SMCI, nearly 1 million contracts traded. 450,000 of those were calls, 536,000 of those were puts, a slight bearish lean overall. Short-term speculators, the 0 to 20 delta range, 234,000 calls, 306,000 puts. Again, a slight bearish lean in the very short term. And what's really interesting is if you start looking 21 to 40, right, you go from slightly out of the money all the way to at the money, in the money, and deep in the money. They go back and forth. They're actually rather undecided. That's going to be like the more mid-term and longer-term sentiment. A lot of people might look at this and say, well, I would expect the longer-term sentiment to be overwhelmingly bearish. Not necessarily the case. Okay, it's actually a little bit more undecided when you're looking at the money and in the money collectively. Okay, that overall, though, a slightly bearish lean, and the very short term, a slightly bearish lean, but with the volatility that we saw on Friday, this is not overwhelming. I'm actually surprised that it's not leaning heavier one way or the other. Listen, if you got value out of this video, please subscribe to the channel. My goal, I'd like to hit 1,000 by market open Tuesday, and I think we can hit that out of the park with your guys' help. Appreciate you, and I'll see you in the next one.